Las Vegas Sphere is the most expensive entertainment structure in the city's history. $2.3 billion invested in a colossal project. From the outside, it impresses like a giant digital globe with the largest outdoor LED screen in the world. But the real question is the Sphere sinking its owners into millions of dollars in losses? Despite mind-blowing shows and apparently millionaire box office, the royal accounts have shown important red years, at least at the beginning. In this video, we will explore the ambitious project step by step, why the numbers don't add up yet, and what comes next. Stay until the end. The current data will surprise you. In September 2023, the Sphere was inaugurated in Las Vegas, a place designed to revolutionize concerts and events. From its origins, the idea was ambitious: to offer immersive experiences with 360-degree ultra-high-definition LED screens and cutting-edge directional sound. For this, the Madison Square Garden Company, MSG, promoted the project together with the original owner of the land, Las Vegas Sands. The goal? To fill the huge structure every night with exclusive events and generate hundreds of millions in revenue. However, from the beginning, there were warning signs. In its first fiscal year, the Sphere posted huge operating losses. For example, in the quarter ending September 2023, it reported an operating loss of about $98.4 million. Between massive investment, operating costs, accumulated debt, and scheduling challenges, the numbers didn't add up. Throughout this report, we will review the causes of this financial mismatch, from its origins to the latest available figures, always based on real and updated data. Origins and vision of the project. The idea for the Sphere was born in early 2018, when MSG Corporation announced a new, never-before-seen entertainment destination with Las Vegas Sands. The vision was to build a coliseum of the future with unique multimedia capabilities: 17,600 seats, up to 20,000 with track foot, and an immersive 16K resolution interior display with high-tech directional audio. Its exterior, covered in 580,000 square feet, 54,000 square meters of LEDs, could transform the building into a surface visible from miles away. Initially, the estimated budget was about $1.2 billion, but from its early phases there were changes in the design to improve the visitor experience. Las Vegas Sands donated the land, near the Venetian Resort, and was later replaced as a partner by Apollo Global Management following the sale of the resort in 2022. MSG hired the architecture firm Populous, which specializes in stadiums, to make the structure iconic both outside and inside. In short, from its inception, the Sphere promised to be a unique project in the world, combining spectacular architectural design with state-of-the-art audiovisual technology, increased costs, and project transformation. Behind that spectacular vision were several critical twists that skyrocketed the budget. Although in 2019, the company estimated to spend about $1.2 billion on its initial construction, that figure was adjusted again in the following years. By 2020, the projected cost had already risen to $1.66 billion due to design changes to improve the audience experience. Subsequently, the arrival of the COVID-19 pandemic in March 2020 halted the works for months. From then on, the interruption in the global supply chain, the inflation of construction materials, and the increase in the cost of labor made the budget explode. Between 2021 and 2023, the project continued to accumulate cost overruns. Its opening was delayed by almost a year and required new financing. In the end, the final figure surpassed $2 billion and reached $2.3 billion, making it the most expensive entertainment venue in Las Vegas history, above the $1.9 billion of Allegiant Stadium. Much of that difference came from rising global prices and materials during the pandemic. In addition, in the first months of operation there were unforeseen events. As the company reported, they paid more than $30 million a month in amortizations just for the construction. That gigantic debt, in 2025 the company was carrying about $1.5 billion in debt for the project, means that, even with high revenues, the balance sheet suffers from heavy amortization. In short, what had been born as the approximately $1.2 billion project due to COVID and inflation, cost almost twice as much. Operational difficulties. Beyond its construction, operating such an innovative platform is extremely complex. The Sphere is designed for unprecedented audiovisual effects, but precisely this ultra-specialization generates unique challenges. For example, as U2 creative director Willie Williams recounted, the Sphere's stage doesn't feature traditional taillights, forcing his team to improvise lighting strategies of their own. In addition, the sound is so intertwined with the structure that it has a 100 millisecond delay between audio and visual, a lag barely noticeable to attendees but critical to artists, which must be compensated for through advanced engineering. Even when the screen is 16K resolution, Williams notes that his team was only able to upload graphics up to true 12K due to the gigantic file sizes. In practice, these technical challenges make the production of each show more expensive. Added to this is another factor. Most artists are not used to such a different scenario. The initial decision was to target long-term residencies, where a band occupies the arena for weeks or months. Although in theory this guarantees continuity of income, in practice demand sometimes declines after the first dates. The mass audience is fascinated by the first dates of the big premiere, as U2 was, but then many fans lose interest. In fact, it was noted that post-U2 residencies, e.g., those of the Eagles or Dead & Company, saw a 30% drop in average ticket prices compared to those of U2. This suggests that the vast majority of fans have only one Sphere experience on their bucket list, and refilling it is difficult in the face of so many entertainment options in Las Vegas. At the same time, internal operating costs are very high. For such an advanced building, the maintenance and services, cleaning, security, energy, technical staff, are enormous. The company mentioned that in its first quarters it incurred exceptionally high depreciation and amortization, which contributed to increasing losses despite good ticket income. In short, the venue offers an unprecedented visual and sound shock, but running it day by day is much more expensive than in a traditional auditorium. Artists must be convinced to adapt their shows to an environment that consumes a lot of technical and logistical capacity, and fans must be convinced to pay high prices in an event that is not new. All these operational details link the financial equation. Even if you sell tickets at high prices, expenses go up at the same time. Iconic events and highlights. Despite the challenges, the Sphere has indeed recorded notable successes in its artistic offerings. The debut couldn't have been more shocking. U2 opened the arena in September 2023 with a 40-concert residency, which sold out almost all tickets. Alongside that, filmmaker Darren Aronofsky released his immersive documentary, Postcard from Earth, a few weeks later. Since then, other big names have taken the scene. Residencies for the group Fish, Dead & Company, predecessors of the Grateful Dead's legacy, the Eagles and Backstreet Boys, and even Kenny Chesney in 2024. Each of these events not only marked important sellouts, but also global coverage for the venue. For example, the 4D film Postcard from Earth has just surpassed 4 million tickets sold, a box office milestone for immersive screenings. In addition, to generate expectation, the company has launched different seasons. The immersive version of The Wizard of Oz, which debuted on August 28, 2025, stands out. With the staging to the rhythm of the original 1939 film, more than 500,000 tickets have already been sold for that premiere, generating more than $65 million in sales and more than 280,000 tickets in the first 15 dates. These bets seek to show that the Sphere can go beyond traditional concerts, also attracting fans of cinema and corporate events. And in terms of programming, the plan is ambitious. It has been estimated that in 2025 the Sphere will offer about 100 concert dates, compared to 70 the previous year. In short, although the business was always focused on audiovisual spectacularity, the place has also built a list of outstanding shows and media coverage that feeds its global brand. These media and box office achievements, U2 sold out, millions of tickets sold, star presences, etc., reflect the enormous potential of the project when everything goes as planned. External factors affecting the equation. In addition to the internal complexity, there are several external factors that make profitability even more difficult. First, the fluctuation of tourism. Just as Vegas debuted the Sphere, the influx of visitors increased. In 2023, the Las Vegas Strip received 5.2% more tourists compared to the previous year, reaching a record 40.8 million visitors. Higher prices for flights, lodging, and meals have discouraged occasional visitors, according to studies by the LVCVA, LV Tourism Authority itself. This reduces the potential base of ticket buyers, especially for shows looking for foreign tourists. Tourism and competitors. Fewer tourists and more entertainment destinations make it harder to reach full houses. The offer of residences in Vegas itself, destinations such as Aria, Mandalay Bay, etc., is very competitive. In addition, options such as concerts in sports stadiums or event streaming platforms also compete for the public's money. Overall operating costs, energy and maintenance expenses are an important factor. Just to think about the scale, reports indicate that the Sphere could consume up to 28 megawatts at its peak, enough to power about 21,000 homes. Although the company says it plans to cover 70% of its consumption with renewable solar energy, while those agreements are being formalized, the costs of electricity and cooling, due to the huge LED and air conditioning systems, are very high. In addition, the staffing and technical maintenance of such a unique building raises payroll and daily costs. Regulations and taxes. Like any company, Sphere pays licenses, local taxes, and operating fees. Regulations in Nevada regarding entertainment can be onerous, e.g., show fees, filming permits, safety measures. Any public rate increases or legal changes could further affect the project's net margins. Together, these external factors create a more complex picture. It's not just about filling the sand, it's about doing so in a changing global and local environment. Even with shows that draw crowds, the Sphere must contend with a volatile tourism market, sky-high operating costs, massive power, specialized personnel, and competition from other entertainment destinations, both in-person and digital. Each of these factors can detract from profitability in the final equation. Financial analysis. To really understand why the Sphere has been in the red, let's review the most recent accounting figures. Throughout 2023 and 2024, the company reported significant quarterly operating loss results. For example, in the fourth fiscal quarter of 2023, the parent company reported an operating loss of approximately $98.4 million. In the first fiscal quarter of 2024, that loss remained at similar levels, around $193.9 million for the Sphere. Already in the second fiscal quarter of 2024, things began to improve, with smaller losses, about $125.1 million in the concert segment, improving by 20% compared to the previous year. But the most recent marks a radical change. In the April-June 2025 quarter, the company reported a net income of $151.8 million, profit, with total revenues of $282.7 million. In that same period of the previous year, they had lost $46.6 million. This means that, according to the latest reports, the operation is already close to profitability thanks to the increase in shows and better management. However, to assess the situation, it is key to consider all sources of income and expenditure. Revenue, the box office of concerts and events is still the largest part, the shows of great artists with tickets at premium prices. Added to this are revenues from concessions and merchandising inside the arena, advertising on its gigantic outdoor screen, Exosphere, sponsorships of corporate events, and rental of space for special activities, conferences, product launches, etc. On the cost side, there are several items. First, huge fixed costs. Annual debt repayment of the $2.3 billion investment absorbs hundreds of millions each year. Added to this are payroll, especially sound and video technicians, operators and security service personnel, energy costs as we saw, and continuous maintenance of the infrastructure. In addition, variable expenses for each show, production equipment, extra lighting, additional labor, and insurance. The company points out that in 2024, it had very high general and administrative expenses, personnel, insurance, marketing, that totaled another tens of millions. To do the simple numbers, in 2024, the Sphere sold millions of tickets, but the associated costs were higher. For example, depreciation, loss of carrying value of the building equipment, alone was high, which increases the quarterly accounting loss. So, although a show can generate several $1 million, in the annual global profitability is far away. To break even, the arena is estimated to have to operate at a very high constant occupancy, perhaps filling most of its 17,600 seats most nights, which is difficult because of the nature of events such as sporadic residencies. As of current data, the gap between revenues and expenses has narrowed but persists. Debt of approximately $1.5 billion, coupled with cash flow that is only just turning positive, implies that long-term profitability is still uncertain. Data updated to date. What do we know about the most recent results? The latest available suggests that the Sphere is starting to change color numbers. During the second quarter of 2025, April to June 2025, the company reported revenues of $282.7 million and, thanks to the increase in scheduled shows and ticket sales, obtained net income of $151.8 million. This contrasts sharply with the previous year, when there was a loss in that quarter. According to executives, this shift is due to having more concerts at full capacity. They announced 100 dates for 2025 versus 70 in 2024, and a more efficient mix of events. In terms of occupancy and nights operating, there is no public data on occupancy percentage, but it is known that most of the important residences have largely filled the spaces. The sales success of The Wizard of Oz and other shows shows that there is latent demand. However, dead nights or nights with lower demand shows are still a challenge. Minor shows only partially cover the costs of opening the stadium. Future projections. Sphere Entertainment's management states that it will implement several measures to fully recover profitability. Agreements have already been signed with the United Arab Emirates for a similar new venue in Abu Dhabi, diversifying revenues. The development of smaller spheres, about 5,000 seats, was also announced, which would cost less to build and operate, so that it could expand faster and in markets where the Las Vegas version would be too large. In addition, they plan to continue to increase corporate and sponsored events. For example, they have already worked with Hewlett-Packard and Lenovo on key conferences, as well as strengthen the sale of advertisements on the light facade. In short, the latest data shows a reduction in losses and, in the best case, a profitable first quarter, although the company is careful to call this sustainable profitability. They continue to keep a close eye on low occupancy nights and the public's response. Can it be rescued? Can the Sphere become profitable? There are two possible paths. In an optimistic scenario, the immersive concept evolves. The most demanded dates are filled, the brand is used to sell digital content or virtual tours, and diversification, small spheres, Abu Dhabi, corporate, generates stable revenues. The clearest sign of this is the recent quarterly profit and the plan to expand the model globally. Managers believe that, over time, economies of scale will improve. More recurring events, infrastructure already paid for, and lower costs in satellite projects. In addition, some future costs, such as energy, could be moderated by the renewable energy agreements they announced. But in a pessimistic scenario, massive debt and the need for continued revenue could continue to crush profitability. The residency-based model means that if there aren't new, wildly successful shows each year, revenues will fall. Critics warn that an empty hotel, no matter how impressive, cannot survive. In other words, if the seats are not occupied, even a giant architectural icon is not sustainable. Also, if high-fare tourism in Vegas remains depressed, attracting expensive crowds will be more difficult. A sign of optimism is the ticket sales and international attention. It is estimated that the Sphere sold more tickets in its first year than many other stadiums in full years. However, the signal of high debt and recent losses is weighing. Comparatively, another great example is the Raiders' Allegiant Stadium in Las Vegas. a $1.9 billion project funded in part by state bonds, which is now profitable thanks to the NFL and regular sporting events. The Sphere, on the other hand, depends on atypical musical tours. In terms of lessons, many megaprojects have gone off badly and then improved, while others never met initial expectations. In this case, the recent numbers are more encouraging than those of 2023/24, but it is still too early to declare victory. The company has made adjustments, more events, greater diversification, and the media environment is of continuous interest. Following the progress of their global plan, the small spheres and international expansion will be crucial to see if they finally manage to turn their balance sheets green. Conclusion. What did we learn from the Las Vegas Sphere? First, that very high revenues do not guarantee financial success when costs are of the same order of magnitude or greater. Spending $2.3 billion on a project also involves huge debts and expenses for years. Second, it confirms that the most innovative projects bring unique risks. Cutting-edge technologies and new experiences can captivate the public, but they also generate operational challenges and extra costs. Finally, it serves as a reminder that even megastructures need to be well-filled to survive. As an analogy goes, a full hotel is profitable, but an empty hotel, no matter how impressive, cannot survive. In short, the Sphere exemplifies the clash between vision and reality. It's a beacon of entertainment innovation, but its future depends on balancing that show with solid numbers. Do you think the Sphere will finally be able to take off financially? Or will it be a sentimental cost of Las Vegas? Leave us your opinion in the comments. And remember, the most recent financial data is in official sources. If you're interested in digging deeper, check out Sphere Entertainment's Q2 2025 report. Thank you for joining us in this analysis.